Hey, welcome back. Today is April 17th, Saturday, and this is my second post today. And on this post, I'll be telling you about the overall crypto markets, which includes Bitcoin dominance and Bitcoin price action, and see how they could potentially affect the overall altcoin markets. Before diving into Dent token, Dent USD, and see what has gone on in here, I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market, according to what I'm seeing on the charts. Before I begin today, if you guys are enjoying this content, make sure to subscribe to this channel and like this video, as I'll be keeping updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 2 free stocks upon a successful sign up and a qualifying deposit of $100 as of today, and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor, and this is not financial advice. I am purely sharing my own speculation and opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as extremely risky and volatile. If you have any questions or comments, please do only leave them in the comment section below. But I'll try my best to get to as many of them as possible. Now, see what's going on in this market first. Most importantly, I do take a look into Bitcoin dominance. Tells me where the money could be trending into. Would it be Bitcoin, altcoins, or neither? Today, we have Bitcoin dominance right now down about 0.3%. This breaks down to Bitcoin price action down about 0.9%. Total altcoin market cap down about 0.3%. Now, this would still be the downside of Bitcoin dominance trending downwards. I will usually see Bitcoin pullbacks not affecting total altcoin market cap as much. I still emphasize Bitcoin dominance to trend downwards. That's generally speaking better for the altcoins on both the upside and downside. Because conversely speaking, if Bitcoin dominance was trending upwards, the upside of that, I will usually see Bitcoin pullbacks affecting total altcoin market cap more on the downside. So for example, Bitcoin pulls back by 1%, I could usually expect to see total altcoin market cap to pull back by more than 1% if Bitcoin dominance was trending upwards. Bitcoin dominance here on the weekly time frame, we are still in a falling wedge pattern until we get a decisive weekly candle close below this bottom trend line to the point where I cannot adjust it anymore to fit a falling wedge pattern shape. The price action I'm looking for here is about 51% weekly candle close for this week's candle. Okay. That'd be a safer signal to tell me that this Bitcoin dominance price action has broken below this falling wedge pattern, which is generally a bullish pattern. I'm going to skip Bitcoin price action here because I've already done a more detailed post on my first post today, but do take a look at that. It is important in seeing how that could also affect the overall altcoin markets. But let me point out something. If Bitcoin price action pulls back at any time, it could still have a bearish effect on the altcoins. That bearish effect would be greater if Bitcoin dominance is trending higher. Let's go over to Dent, see what we are dealing with here. I'm gonna go from the monthly time frame down to the daily, which I consider to be macro time frames, and see if we have any overbought RSI readings or possible bearish divergence scenarios. Monthly time frame here, we're currently about 94, so that's about 94 out of 100. That's very overbought on this monthly time frame. Weekly time frame here, we're currently about just right above 71 here, so slight overbought. There is, I think this could also be read as bearish divergence as well. There's too little of a difference here, so this could be read as bearish divergence, even with a slight higher top here on here, I would still say that's bearish divergence. Price action did retreat. Okay, bearish divergence more often than not can still signal a pullback. And we are seeing that right here. If the price action was to make a higher high here, it does need to beat the last high RSI reading here of over 96 to negate bearish divergence. 3-day. We're currently about 66 almost. Not in overbought territory. There has been bearish divergence as well on this time frame. If very similar thing could be said here about negating bearish divergence if the price action was to make a higher high here on this time frame, as what I said on the weekly time frame. Daily, we're currently about 51. Bearish divergence as well. We're seeing that pullback. And if the price action was to make a higher high here, it does need to beat the last higher RSI reading here of about 88 to negate bearish divergence on this time frame, about 89 almost. See what I could be dealing with here. I have also refreshed the Fibonacci retracement levels to reflect a bottom of about 8.84 cents. The bottom here. Top here would be about 2 cents, okay, excluding this huge wick above the 2 cent level. Now, I do estimate a falling wedge pattern here, and I'm saying estimate because we don't have that third touch, the upper trend line here, to validate it, okay? But it is in a falling wedge pattern shape right now. Now, this is just an early estimate. I don't have that third touch to validate this pattern. It is not completed. But if it's completed according to what I have here, or very similar to what I have here, then according to Thomas Bukowski and his website, thepatternset.com, it is a 68% chance of it breaking to the upside. If it breaks to the upside, let's say, for example, by April 23rd here, the measured target would be about 1.8 cents and some. Okay, that's the measured target if it breaks out by April 23rd. Now, measured targets are theoretical approximate targets only, may actually be different in real-life price action, more or less, and that's taken by measuring the opening of the pattern and then adding it back to a expected breakout point. So this is just an example. Of course, if it breaks out later, then the measured target would be lower. Let's take a look into some of the key supports and resistances relevant to this price action right now. Key resistance immediately would be about the 1.3 cents fib level area. The daily 21 MA, which is right above that, the blue line. Next up, 1.4 cents fib level area. Next up, 1.6 cents fib level area. Next up, the 1.7 cents fib level area. Beyond that, I would expect resistance coming from even at the measured target, 1.8 cents. In that range, I would say. So from about 1.87 cents here to even about 2 cents, I could expect resistance coming from past trading history. If the price action actually gets beyond its measured target, of course. And then if it goes any further, I could expect resistance from about the 2.3 cents coming from this past trading candle here. Key support. First of all, would be about the 1.1 cents fib level area. Next up, 0.84 cents fib level area, which is pretty in line with this daily 50 MA. If that does not hold, I could be looking at the 3-day 21 MA as the next level of key support as of this snapshot. Let's take a look into the bullish and bearish case scenarios. Bullish case scenario, price action finishes validating this falling wedge pattern with that third touch to this upward trend line. Breaks out of this pattern and go towards its measured targets. Now, if I have not mentioned already, measured targets are theoretical approximate targets only, may actually be different in real life price action, more or less. I will also not lose track of that very high RSI reading there on the monthly time frame, okay? Because the higher it becomes, the higher probability of a pullback. And that's out of a range of 100 on the top. Bearish case scenario, price action breaks its bottom trend line. That should take into consideration of breaking this fib level area at about the 0.84 cents, as well as the daily 50 MA. Then the next level of key support I'll be looking at will be the 3-day 21 MA, and seeing if that holds, and seeing if that will also keep this falling wedge pattern shape intact. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know your agreements, disagreements, feedback. I love to hear them. Hope you manage your risk carefully. And if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.